Hello everyone, I'm Versitus, and this is my first video on investing. So a quick introduction to this channel. I think it would primarily be for myself, for me to learn, because I'm doing a lot of research anyways, and I think that it would be good for me to consolidate and to articulate my research to reinforce my learning. It would also be great to receive criticism and learn from that, and also it will help me to learn other skills like speaking, editing, and others. I think I can really work on those, especially speaking. I don't know, maybe I speak too fast. And like editing and research, there's just so much to learn, and yeah, it's going to be a very long journey. And another reason I'm starting this channel is also maybe as a log of my personal research, so I can look back and see what kind of thinking I had when I was younger. And another reason might be the opportunity to collab with other channels. I think a few big inspirations for me to start this channel would be like Contra Turtle and Bunty, and a few others, and maybe people from my church as well. And of course, I would also like to share my passion for investing. I really like to do research, and maybe I can encourage others to invest on fundamentals as well. But I would like to caveat that if you're not passionate about doing research or reading, maybe you should stick with money market funds or robo-advisors, or maybe just broad-based indices until you make a lot more money, or because otherwise I don't think that the time that you spend on doing research is worth it. Because it's often not sufficient, if you get what I mean. It's like, so I'm a chess player as well, and if you want to be average at chess, you have to spend hundreds, if not thousands of hours of learning and practice. Yeah, and then you would be average. I think it's the same for many other competitive sports and games. You have to put in a lot of effort to be average, but in investing, you get to be average for free. Everyone can be average if you buy the index. Yeah, and that's why I think that if you want to do research and trade based on it, you really have to do a lot of research and enough to be way better than average, which requires a lot of work and time and effort. My financial advice to those that are not passionate about investing would be to just save more money, make more money, and if you really want to invest, maybe just buy the index of different markets, like maybe S&P 500, STI, Nikkei, Hang Seng Index, and whatever you want. And make sure you're investing with money that you don't need in the short term, so you can hold it through losses, through gains, and just for a long time and let it compound. If you're new to investing and would like a video breaking down your different options for brokers and which ones I think you should use for different markets and different products, let me know. I can make a separate video on it. But for myself, I currently use CMC Invest for Singapore trades, stocks, and IBKR for anything requiring foreign exchange. And those should be the lowest total fee brokers that I know of. Okay, so finally on to the main section of the video. And of course, my first video will be done on my favorite company, sembcorp. So the main line of my thesis is that energy demand will continue to outpace supply. Asia will continue transitioning to renewables, and sembcorp is well positioned to profit for decades. But let me start by addressing the breaking news, and what's happening right now is that sembcorp is in talks of acquiring Alinta Energy, which seems to have negatively affected the share price. But I think it's great. I really like it when sembcorp stock goes down for short-term reasons because it lets me buy more. I'm still young and I have an active income, so it's great for companies I like to stay cheap while improving fundamentally. And so yeah, the price is like that. Let's talk fundamentals. Usually I also don't like mergers and acquisitions, but sembcorp has proven to do them very well. For example, SDIC New Energy and HYNE in China completed in 2022, Vector Green Energy in India completed in January 2023, Galax Group Renewables in Vietnam completed 2024 in June, and Senoko Energy Singapore completed in 2024 November. All of these acquisitions have been profitable, and it shows that sembcorp has a track record of choosing acquisitions carefully and sometimes at great prices. As for this Alinta acquisition, I have a few guesses as to why they want to do it. So the first and biggest reason is the renewables pipeline. So in Australia, it takes up to 7 years to get permission and grid connection for new renewables projects. And so acquiring Alinta gives sembcorp access to this already approved pipeline of renewables installation, which if I recall correctly, is about 10 gigawatts, which saves them a lot of time and money in expansion. But for this point, I think they might be a bit too eager to hit their 25 gigawatts by 2028 goal. It's good to have goals, but if you have to sacrifice a lot to reach an arbitrary goal, I think it's not very good for shareholders. I'd rather the company compound safely and slowly. But a second reason I think they might have done this acquisition is for the grid data. So this could be huge actually. Sembcorp is historically a B2B player. It sells power to factories, data centers, and grids. And Alinta is a retail utility, which they have 1.1 million household customers. With the retail data, sembcorp could expand into the B2C space much more easily in the future, which increases the total addressable market for them significantly. But there are also big risks. If they mishandle the business due to lack of experience, it will be really bad. Governments hate when voters have high bills, so if they want to expand into retail, they have to do so very carefully. And I also like this acquisition because it gives them control over the business, so they can clean it up by divesting the coal plant and possibly the gas plants, and transition more towards renewables and batteries. And yeah, so I think this acquisition is definitely risky, but there's a good chance that it's very, very profitable and accelerates the growth of their renewables portfolio. I think the market might have reacted like that because they don't want to deal with the uncertainty of the deal, or if they're scared of the massive debt Sembcorp will be taking on, which seems to me like a great time to buy more. And you have to remember, in the short term, we're in a declining interest rate environment, which is really good for Sembcorp because renewables are capital intensive and Sembcorp uses a lot of debt. Also, I love Sembcorp because they are one of those companies that can be more comfortable with high gearing, which results in such a high ROE, since their cash flows are very predictable because of their power purchase agreements. But personally, I prefer trying to look at 10 to 20 years in the future, so these don't matter that much to me. Okay, with the Alinta acquisition out of the way, let's move on to my main thesis. So first, trends. Let's look at energy demand. So I have a few reasons to believe that energy demand will keep accelerating. The first reason is air conditioning and the Jevons paradox. So right now there are about 2 billion air conditioning units on Earth, and this number is projected to triple by 2050. But I personally think it could be more than triple. The Jevons paradox is like, when you increase a resource's efficiency, it often leads to more, not less, overall consumption of that resource. So for our example of air conditioning, I think that it would make sense for there to be more electricity consumption as air conditioning gets more efficient, because there will be more and more aircons being built as they get cheaper. And Asia is really hot, so I think that this demand will be defensive as it gets cheaper, which is already happening. You see technologies being used on a large scale, like in the Marina Bay district cooling network, which is 40% more efficient, and technology is only going to keep getting better. Okay, I think in this video I'll leave out a lot of the details like that because they are more scientific and require a lot of heavy reading, and I want to keep this video shorter. Maybe I can cover them if you're interested in future videos. So it include research like perovskites and solar technology, and also nuclear technology like fusion, small modular reactors, and other stuff like that. Let's move on. The next source of increasing energy demand would be data centers. This should be quite self-explanatory. They consume a lot of energy, and there will be many, many more of them to come. Sembcorp already has PPAs with many major data centers, many of which are green contracts where the client pays a premium to meet their corporate environmental goals. And a lot of these environmental commitments are actually huge. For example, Microsoft, I think they committed to be net carbon negative by 2030, which is, it's crazy. So they're going to need a lot of green energy, which could include nuclear, but for now, the cheapest is solar. Sembcorp also offers integrated solutions for data centers, which are like energy, water cooling, and waste management, which is also an advantage for them. Another driver of energy demand could be electric vehicles, which are projected to add 600 terawatt hours to energy consumption in Asia alone by 2030. And also, tons of new batteries will be needed to support most people charging their cars at the same times, like if they all come back from work. And Sembcorp is one of Asia's largest battery operators. Okay, another trend I want to look at is grid infrastructure. Technology is constantly improving, and that will allow the supply of energy to meet the exponentially growing demand. Like UHVDC supergrid development allows supply-heavy areas to export energy efficiently to more demand-hungry areas. Another trend we can look at now is decarbonization. So everyone everywhere nowadays is incentivized to switch to renewables due to carbon credits, policy, and taxes, and all the governments will support going green. Something else that stands out to me is oil and gas politics. So Asian nations have very little control over oil and gas prices, which gives the Middle East, Europe, and US power over them. Asian nations are also they are politically incentivized to transition to renewables to defend themselves from volatility, sanctions, or threats. So that's about it, briefly looking at the trends in the world today. And now we can move on to the science. Like I mentioned just now, I won't go too in depth, but let's just briefly look at the technologies. So energy technology, improvements in solar and battery technology make them cheaper and better, increasing Sembcorp's ROIC, return on invested capital. And Sembcorp already operates Southeast Asia's largest energy storage systems. A few potential disruptions could include nuclear, but actually this won't be feasible in ASEAN for the next 10 years unless some really groundbreaking technology is discovered. Small modular reactors and floating nuclear power plants are still not economically viable compared to solar, and even if they become cheaper, they will still require solar to stabilize the grid. And overall, I think that advancements in technology will always benefit Sembcorp because they can just operate nuclear power plants if that becomes more efficient in the future. Okay, moving on, let's look at Sembcorp's competitive advantage. It's very important because energy is a commodity, and so you really need to have something that stands out to succeed in this space. Sembcorp's first advantage is their sovereign link. So this gives them a good credit rating because people trust in the Singapore government, and it results in cheaper debt for them due to the very low risk premium. And they also have access to green bonds, which is like cheap debt that must be spent on environmental projects, which is their entire business anyways. And yeah, having cheap debt is very important because this is a very capital intensive business, and you always want to maximize the spread between your cost of capital and your return on invested capital. Having a sovereign link also gives sembcorp a trust premium because they have increased efficiency in land acquisition, regulation, and other agreements, since other countries trust a Singapore-owned company more than private companies. Sembcorp's second advantage might be their ecosystem mode. Sembcorp owns and builds massive industrial parks, and they control the land and infrastructure, which allows them to sell energy at better margins and have guaranteed customers. They also offer integrated solutions, which is more convenient for their customers. So Sembcorp's cash flow from gas as well as uncorrelated income streams like urban land sales can fund their renewables expansion with lower risk and stronger balance sheet than other renewables companies. Okay, let's move on to some financials. Firstly, you get a huge margin of safety if you buy Sembcorp now. The valuation is very cheap and it's being valued as an energy or utilities company with a 10 to 12 PE when their vision of driving energy transition is very clear. And if you compare this to other pure play Asian renewables companies, they trade at 35 to even 100 times PEs historically, like Adani Green, Gulf Energy, and etc. Also, as I mentioned earlier, a falling interest rate environment is great for Sembcorp as they are debt heavy and they use debt to finance new energy projects. So let's say a base case would be that they are just an energy company, they give you steady dividends and you get a 4 to 7% CAGR. You know, I'm being very, very conservative here in my base case, even ignoring all the trends that I talked about earlier. Even if this company doesn't grow at all, you get a 7% annualized return. 0% growth, 7% CAGR, base case. Now let's look at the bear case. So it could be that the management is corrupt or they just make a very bad mistake and you lose almost 100% of your investment. It could happen. It's very unlikely, I think, but it could happen. And that's why you shouldn't be so concentrated into one stock. You don't know what can happen. And I should be decreasing my exposure as well. I'm about 70% Sembcorp right now, which is way too high. You know, many times in life, you just have to be humble. You know, you don't know what can happen. So even though I did a lot of research and I'm super, super bullish on this company, you just have to acknowledge that you could be wrong sometimes. That's a life lesson, not just for investing. For Sembcorp, if their return on renewables drops, their high debt could cause bankruptcy, or if the government bails them out, which is probably going to happen, then they could still make a lot of losses due to interest payments and maybe shareholder dilution. There are a few other possible bear cases, like for example, energy demand could collapse somehow, or if a new disruptive technology like nuclear or others becomes much more viable and Sembcorp is not able to adapt quickly enough, or if something like if energy becomes infinite and free, or it could be that foreign governments bully Sembcorp to support their own energy companies. I think there are many, many risks and possible futures where Sembcorp fails terribly, but I think that these are very unlikely, and that's why investing is so beautiful. It's like an art. No one can predict the future, but different people have different ideas, and my idea is that all of these are very, very unlikely, and so I'm investing in Sembcorp quite heavily. But if you're able to identify risks that I didn't consider, or you think that those that I highlighted are more likely than I think, then you could choose to not invest in Sembcorp, and it will be a perfectly reasonable decision as well. And finally, my bull case, which I think is most likely, where energy transition continues with Sembcorp leading the market. And you know, in 2024, Asia had 2,370 gigawatts of installed renewable capacity, and that's projected by IEA and IRENA to double by 2030, which is about a 10 to 12% implied sector CAGR. Sembcorp had a 17 gigawatt capacity in January 2025 and only a 0.7% Asian market share. So in my bull case, Sembcorp's market share expands in addition to the broader sector growing, which will likely result in a sustained high double-digit CAGR and higher earnings multiple. Okay, I think that's all I'll share for now. I wanted the video to be 5 minutes, but and I think I spoke too fast. My mom is always scolding me for speaking too fast. I think in future episodes, I will try to speak more slowly, and if my audience wants, they can use the speed up function in YouTube. I really need to practice speaking a lot more. Anyways, thanks for watching. Do your own research. It's not good to be so concentrated. I acknowledge that I'm taking a big risk, and I will try to de-risk when the opportunity presents itself. And this is not financial advice. I'm just sharing my thesis because I'm passionate about investing. And please leave feedback, thoughts, questions, or suggestions for future videos in the comments, and like and subscribe.